Meta and YouTube are liable in a social media addiction landmark trial. What does this mean financially? Hello everyone, welcome to Simon's channel, whereby we look at financial impacts and implications of the upcoming issues. Kindly do subscribe. Take a minute to subscribe. Thank you. Landmark ruling for Meta and YouTube. So Meta and YouTube, they have been found negligent in a landmark social media addiction case. What does this mean financially for the company and for the people and for the investors in their stocks? The ruling that Meta platforms and the YouTube were found negligent in a landmark social media addiction case, it represents a potentially transformative moment for the global technology and the digital advertising industry. From a financial and business perspective, this development introduces a new layer of regulatory, legal, and reputational risk that could materially reshape how large platforms operate and monetize user engagement. At its core, the decision challenges the long-standing engagement-driven business models that underpin both companies. Definitely. Platforms owned by Meta, the Meta platforms are the Alphabet Inc., that is the stock, rely heavily on maximizing user spent, through algorithm content delivery, which directly fuels advertising revenue. And their primary income stream, and so a negligent ruling tied to the addiction signals that these engagement mechanisms may now be legally scrutinized as harmful, potentially forcing companies to redesign algorithms to prioritize user well-being over the watch time and the clicks. And remember, such a ruling, it could lead to reduced user engagement metrics, directly impacting ad impressions and revenue growth. So, financially, the most immediate concern is the litigation exposure. A precedent-setting case opens the door for a wave of similar lawsuits globally, and particularly, in a high regulation markets like the US and the Europe. This could result in a multi-billion dollar settlement costs, higher legal reserves, and increased insurance premiums. Investors may begin pricing in long-term liability risks, leading to heightened volatility in stock such as Meta and Google. Beyond direct legal costs, regulatory consequences could be even more impactful, whereby governments and agencies may accelerate the introduction of more strict digital safety laws, especially around the minors, on the usage, data practices, and algorithm transparency. Compliance costs would rise significantly, requiring investment in AI moderation systems, human oversight, and the platform redesign. This could compress operating margins for both companies over the in a medium term. From a business strategy standpoint, the ruling may force a pivot towards a healthier digital ecosystem. This introduces features like, the screen time limits, reduced algorithmic amplifications, and more curated content feeds. While these changes could improve public perception and reduce long-term legal risk, they may also weaken the addictive loops that, currently drive high engagement. And this poses a structural challenge to growth, definitely. On a competitive front, smaller or emerging platforms could benefit if incumbents face tighter restrictions, creating opportunities for the new entrants with alternatives, less engagement intensive models. At the same time, companies specializing in digital wellness tools, parental control software, and ethical AI could see increased demand, opening adjacent investment opportunities. Get that very well, that it will open adjacent investment opportunities for the companies specializing in the digital wellness tools. In the capital markets, this development may trigger a reassessment of valuation multiples across the social media and the digital advertising sector, whereby investors could shift preference towards diversified tech firms with lower regulatory exposure, or those already emphasizing privacy and user safety. And ESG, that is environmental, social governance, considerations will also gain prominence, with institutional investors scrutinizing how companies manage user well-being risks. So, in the summary of all this, the negligence ruling is not just a legal event. It is a structural inflection point. It challenges the economic foundation of attention-based platforms, introduces very significant financial liabilities, and accelerates regulatory oversight. While Meta platforms and YouTube remain dominant players, their path forward may involve slower growth, higher costs, and the fundamental rethinking of how digital engagement is designed and monetized. Thank you for paying attention to this matter. So it's for smart investors to be very keen, because already Google stock is dropping very fast. Watch